Welcome back, investors, to Ticker Time News. I'm Adam, and Costco is trading slightly lower after the company reported its Q2 earnings. There tends to not be a lot of mystery when it comes to Costco reporting its earnings because the wholesale club giant is among a few retailers that still report sales and comparisons on a monthly basis. Costco also doesn't provide forward-looking guidance. So, what are investors left to focus on? Well, EPS and margins when Costco issues its earnings report. Now, I must admit, the combination of inflation and the holiday shopping season had me wondering if Costco could pull off a win here, or would we instead get a slowdown on the quarter? With that said, what are the main takeaways from Costco's report? Okay, before I dive into the report, could you smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. And if it's your first time watching, click subscribe. Thank you, my friends, for doing that. All right, here are a few of the key takeaways from Costco's earnings report. EPS jumped 36% year over year to $2.92 a share, which was nicely above estimates. However, the size of the beat was notably smaller than the beat of the last three quarters. Revenue was generally in line with estimates. Adjusted same-store sales, which excludes gas and FX, were up a solid 11.1%, a noticeable uptick from the 9.8% in Q1, but largely as expected given the monthly data that Costco provides. What was new information was that February adjusted comparisons came in at 10.6%, indicating that the nice sales pattern is continuing into Q3. Overall, Q4 comparisons do compare favorably with those of Walmart Sam Club at 10.4%, and to comparisons of just 0.9% at BJ Wholesale Club. Gross margin was lower by 32 basis points, but up 5 basis points excluding gas and inflation. Core merchandise was down 43 basis points excluding gas and inflation. This core merchandise decline may be spooking investors. Costco notes that it was lapping a tough comparison last year, and its margins are still above where they were 2 years ago. Costco concedes that inflation is creeping in via higher labor cost, higher freight cost, and port delays. Also, higher demand for basically everything from computer chips to oils and chemicals to resins is translating into higher merchandise cost. On the fresh side, proteins, butter, and eggs are seeing higher costs too. The bottom line, I think the weak margin performance in the core merchandise category is the main negative from the report. Now, you may be wondering, why are you bickering about a few basis points here or there? Well, Costco operates in a business with super thin margins, and every basis point in margin has a bigger impact on profitability, especially in its industry. And for that reason, you need to pay closer attention. Also, Costco's share price has been outperforming most retailers, so expectations were definitely running high. And that combination can impact a stock when numbers are off even by the tiniest amount. All right, that's what I think about Costco's earnings. What did you think about them? Let me know in the comments below, as your comments make these videos so much better. Smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.